Hello, Oracles. Well, have we hit the bottom for Tesla stock and TSLY? We're going to get into some chart information today. Had something strike me earlier today about the fear and greed index. We are currently at 27, which is fear. I will show you guys that chart momentarily. But looking at those charts, looking at what we have going on, we could assume that we may potentially be at the bottom. But we also have production and delivery coming up on Monday. So we've got quite a few things to discuss to determine whether we've hit the bottom or not, and we will get into that in just a minute. All right, so looking at the charts today, we were down 1.16%, but we did outperform the market on the day. So that to me is great. It's nice to see this divergence, and it does go the other way sometimes. So sometimes we see the market green and Tesla is red. So it's nice to see this little outperformance, even though we were red on the day. So looking at the patterns here, we've obviously came down on this channel, went up at this channel, broke down out of the channel that I had drawn here. We have this gap to 262, gap down to 217. So the question is, which gap are we going to fill first? Is this the bottom here at the 244 level, or do we have further to go before we end up coming back up again? So some of the other indicators I look at to determine this are going to be volume. Volume is relatively low the last couple of days. I think part of that has to do with the fact that we've hit rebalancing and we've got the production and delivery numbers coming up on Monday. So probably nobody really looking to do any major moves until we end up getting that information. And on top of that, we've got the RSI at 43. Now, the whole entire year we've been following this pattern from overbought to oversold to overbought. We came up close to it. We hit the mid 60s, still a bit short of that 70 level, which is overbought, and we've been pulling back. So we technically didn't get into the overbought, and now we're pulling back. And I think what we are going to be seeing for the rest of this week is what I had called last week, which is I think with all of the rebalancing, and we've seen it historically, typically the last couple of days of the quarter, we end up seeing some buying pressure coming back in as all of the sales are done, and then all of the institutions start buying back in. So will we see some of that going on to finish the week off? So now when we look at the fear and greed index, we are currently in fear at 27, pushing darn close to that extreme fear. Now, we had hit extreme fear back in April, and at that point, we bounced up and we recovered very nicely in Tesla. So, this is kind of the reverse dead cat bounce that we have been seeing all year long. We went up significantly, went into extreme greed, sold off a little bit down to fear and extreme fear, and then recovered from there and pushed up even higher. So, we have been making higher highs and higher lows all year long. Is this trend going to continue? Our most recent low was 214. So if we bounce higher than 214 and recover from there, we can then guess that we have hit the bottom at this point and will continue going up. Now, another thing I look at is TSLY. So this is the chart of TSLY, and thank you to Gort for putting this together. So this blue line here is tracking the fear and greed index over the course of the year since last November. This over here on this side is what we are looking at for the price of TSLY. Now, Tesla does track pretty closely with Tesla stock, so this could be a good indicator for Tesla stock itself. Now, we had seen here that we ended up hitting fear at this point here back in January. And so we looked at January, and back then the price was around $13.30. Then we pushed up from there, getting close to $18. That was in the greed range. Then we came back down to extreme fear in April. That was well below that 13.30. We had actually dipped down below $13 at that point, and then we pushed up significantly from there. And we all know that Tesla stock has basically tracked with this as well. Then in July, we ran way up again, hitting new highs at this extreme greed point, and then we came back down and hit fear, bounced back up slightly, and now we're back down to fear again. So seeing as this trend has continued all year long, are we going to continue this trend and go back up again, or are we going to fall further? Now, if we take that fear and greed index and we pair it up with a pattern that we could possibly see in the charts, a reverse head and shoulders pattern. And a reverse head and shoulders pattern is bullish. So this downtrend here would have been coming in from January, hitting that bottom, then we bounced up, and this would be April here at that head, coming back up for July. This is us bouncing down, and then this would be where we are at right now, that second shoulder. So do we fall further? Don't know, but this would be that second shoulder, which would potentially indicate the bottom, and then we push up further from there. So again, these are just some chart analysis that we're going over. There's a lot of other pieces that you have to put into the puzzle here. Is Tesla going to beat production and delivery numbers? How is the market going to react to that? What else is going on in the macro environment? Again, we have the government right now with a potential shutdown going on. They need to come up with a resolution by September 30th, or as of October 1st, the government shuts down. Seems like they are going to come up with a resolution to this. This is something that happens quite regularly all the time, and timing of it comes right in September. This is why we get the September effect. End of the third quarter, we end up getting the government stuff going on like this with government shutdowns. We have election times typically every other year. So that's kind of what happens in September. Then you also have to remember that algorithms are doing the majority of the trading. Algorithms are going to look back at the past year and they're going to see how the market traded at that time. Well, based upon at that time a year ago, we had elections. It was ugly. And when that happens every other year, the algorithms are going to take that into account and make the trades accordingly. So we end up seeing some bigger sell offs. And so the way I am looking at all of this information that I'm bringing into myself is when it comes to Tesla stock or Tesla, have we hit the bottom? My thoughts on it are just this. We don't know what's going to happen with production and delivery numbers. I'm kind of waiting to see what happens at that time to determine if this is the bottom or not. But if we end up getting a meet or a beat, then yes, this would be the bottom. And at that point, I would absolutely be a bigger buyer and I'll dump in heavier. I will add significantly more to my Tesla position because next Friday is the X date for that. So at that point, if Tesla does beat on Monday, I'm going to be adding heavier. Again, I will be doing a live stream at that time. So while we're on the live stream, I'll buy right there on the spot with you guys so you'll see it. I will also add heavier to my Tesla stock position because, of course, Tesla is my number one position and I'm still trying to get myself up to that 100 shares. So seeing as we could potentially run after this, I'm going to be buying a little bit heavier. That's just my strategy. And again, I am waiting to see what happens with production and delivery numbers before I make any decisions. Just because we see a potential pattern in the charts that shows us that we may get a bullish run afterwards or a breakout does not mean it is actually going to happen. Last year, we saw 3 different times that there was a pattern indicating that we could be seeing a breakout, and we did not get it. So I never want to assume that technical analysis and the charts are going to tell us what's going to be happening in the future. It's just one of the indicators that says, hey, this is what's going on in the charts. Take a look at some other information to determine maybe this is actually going to happen or not. That's what I use it as. I use it kind of like a treasure map. You're going to see what could potentially be coming up from X marks the spot, and you're working your way there. But you got to look out for booby traps along the way as well. And you got to be careful with that. So for me, I'm taking a look at all of the other information before I say, yes, this is the treasure. This is X marking the spot. This is what I want to buy. And looking at some longer term indicators, again, we have the UAW that is on strike at the moment. President Biden was over in Michigan marching the lines with everyone. It's so contradictory and confusing to me, and you guys can share your thoughts in the comments. This is a president and an administration that is pushing for renewable energy. For us to be able to lead the world in renewable energy, we need all 3 of the legacy automotive makers, Ford, GM, and Stellantis, to be pushing for this as well when it comes to EVs. That's going to help transition the entire world over. However, when he's coming out to push for the UAW, it then contradicts that because it actually makes it even harder for GM and Ford and Stellantis to be able to make that progress. They've already stated many times that it's unprofitable, but they know that they need to make this transition happen, so they need all the help that they can get. Going through this strike is not helping at all. It's the exact opposite. It is hindering them significantly. Ford seems like they are making the most progress when it comes to the UAW and negotiations, as per what the UAW has said. However, Ford has already laid off several hundred workers, and they're contemplating stopping production on the battery factory that they had been working on because this is really going to be slowing down their efforts significantly. So, where are we actually going? Are we trying to get to renewable energy or are we trying to favor unions? I really don't know. Obviously, judging by actions, we are favoring unions over renewable energy. And I'm all for the worker. I'm all that guy. I'm a man of the people. I want to make sure that the workers are taken care of. But aren't there laws in place to make sure we do that? Tesla clearly is doing that themselves. They're taking care of their workers. They don't have a union. They're leading the world when it comes to EVs and renewable energy. So why is it that we're having this conversation holding back all of the other manufacturers? Again, not to get too political on all of this, but it clearly is a political issue. And for me, I'm a person who follows actions rather than words. Show me what you want to do. Don't tell me. Because if you're going to tell me you want one thing, but you're going to show me that you're going to be doing another, then I lose all of my trust in you. One of the reasons why I don't trust much of the government, because that is typically what they do. They tell you what you want to hear, but then do whatever they want to do after they get elected. This is kind of what we're seeing right now, kind of frustrating. And again, I was one who thought that Legacy Auto was going to struggle, potentially hit bankruptcy, maybe even not be able to survive all of this EV revolution. But I thought it was going to be just because they were moving too slow and Tesla was moving way faster than they were. I had no idea. And Peggy brought it up on Twitter that, gosh, we thought Elon was going to be the one to put all of these companies under, when in reality, it's the government who is supposedly supporting them that is going to put them under. Kind of strange, but that is where we are at the moment. So again, you guys leave your thoughts in the comments below on that one. Let me also know what you think about that reverse head and shoulders pattern. Do you think that we have hit the bottom at this point right now? And do you think we are going to be running up from here? I know I would be excited for us to run up. For me, I'm just looking at Tesla alone, knowing some concerns that people are having, saying, is there going to be NAV erosion? Do we end up seeing the stock continue to pull down? And it ends up being one of those yield traps that we've seen in the past. Again, we have gone between $13 and $18 twice this year already. So there's nothing that says we cannot go back up to $18. If we keep in that pattern sideways, it's going to be pretty easy to trade. You can get up to 18, maybe either stop adding or sell at that point, wait for it to come down, buy at the bottom, catch those dividends at the bottom on the way back up. So, just my thoughts on that one. Again, not financial advice. You guys make your own decisions. But if that's the pattern we are going to continue on, Tesla could be a very viable income source that you can utilize to either put that money into cash, you can put that money into other stocks or ETFs. That's what my plan is going to be. And then just take it from there. So, that's my strategy. You guys can let me know your thoughts on that as well, and what your strategy is. Otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.